Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. It is a new era, 1st of July, new financial year for Australian investors. And we was a pretty sort of surprising results out of out of the ASX for the year, but it was pretty well. I mean, surprising, but mainly disappointing more than anything else. Around about up 3% for the financial year overall, but a pretty rough year, particularly if you're if you're a fund investor, because the individuals, the individual stocks and dispersion and the sector dispersion and volatility between intersector and interstock in relation to the volatility in the index didn't, you could have been very lucky or very unlucky and done exactly the same job. So yeah, we essentially we got in the US we had the best quarter in 6 years. It was all led by chip stocks, and that was pretty surprising. Pretty remarkable considering the previous best or the one that it's second to in 2020 was out of a low of I think in COVID, it dropped around about 22%. So NVIDIA and Apple, AMD, chips, same old story. Chip stocks went up last night. That blind Freddy could have told you that was going to happen. End of quarter window dressing, half year with bonuses for the fund managers in the US. The stuff that was up was always going to head up last night in the US. And I essentially said that yesterday in the podcast. The only thing I regret is not being leveraged long into it, because it was the world's most obvious move. What it does from here is a completely different matter. I think we'll probably see a bit of a reversal of that. But traditionally, when you have these massive, the top 5 quarters, over the last 15 odd years, we'll get to this chart in a minute. It's generally, up around maybe 2 to 3% over the course of the preceding quarter, but I think the Dow had something like its best first half of the year in 50 years. So I can't help but feel that we're getting a touch carried away. ASX obviously dropped a little bit yesterday. Like I said, NASDAQ, S&P, all bounced up. I love how ASX investors talk about end of quarter and end of month window dressing. There's no fund manager with the balls in Australia to actually do that, but in the US, definitely. And you can see on the screen there. Unless beta shares is going to do window dressing, you're never going to get that move. End of year tax loss selling, like every single year for the last 5 years, it was just crap. It's a non-event. It's just something that people make up, and it's cognitive bias. Just flag that for next year. It doesn't happen, and if it does, it happens way further out. So we did not here at MPC Markets didn't do a single tax loss selling order at all over the course of the because if you're gonna do something like that, you're doing it weeks out. But essentially the news and socials and everything is just kind of filled with yay for the last quarter. Heard a Goldman Sachs commodities and energy analyst this morning on Bloomberg with the single rosiest and most unrealistic view on Hormuz, basically saying that 2 weeks we're going to be back to normal. So it I don't know what there's what drugs they're on Wall Street at the moment, but then someone's put acid in the water, some sort of hallucinogen in the bloody water supply leading into Freedom Tower, because they're facts versus what the analysts are saying at the moment are one of the bigger departures I've ever seen, actually. But you've got a president where facts don't matter either. That is the quarter. So that's what the best quarter in 6 years, or realistically, probably the best quarter in 15 years looks like. I mean, you got like Micron up 230%. You've got, Intel, it's like the chip sector's simple cousin was up 200%. Although they credit to them, they're sort of turning it around. Our massive favourites in the middle here, CrowdStrike and Palo Alto, forging the path forward for the to dispel the SaaS apocalypse, up 100 to 80, well 90 to 120%. And you can sort of see there's some green shoots in the middle there. United Health was up 50%. So that, look, I mean, some promising signs, because for the ASX last financial year, or the 12 months to yesterday, it was the year of the beaten favourite, like Cochlear, CSL, just WiseTech. It was just all of these market darlings that, have maintained this just untouchable status for probably half a decade, just all got absolutely smoked. And United Health was that, and so was Palo Alto and CrowdStrike, and so are all these software names, and they're starting to bounce a bit. So, we usually tend to be on a 2 to 3 month time frame delay, and I'm loving healthcare at the moment. We've had some really good price action. It's quite defensive. It's where everyone's going to switch when they're over leveraged positions and the chip stocks turn around. And look, and ironically, we've basically got AI becomes its own threat now, because it's just wildly expensive, and shareholders are just not going to cop ridiculous capex spends. So, and we saw that in the price action after the earnings results last quarter in the US. Was beat on revenue, beat on EPS. It rallied, and then they announced their capex expansions, which were way higher on average. I think 20% higher across the board. And then the share prices dropped significantly straight away. So I would, I'm not the only person who would have noticed that, and I'm dead sure that people like Jensen and Elon, who are very say they're not market centric, but they're very market centric and worried about where their share price is. I would say that there's a big risk that they say that they're starting to pull back on some capex spend, or that basically the memory chip shortage is like, it'd be great to get the HBM, but and the stuff they need, but at what price? So there's a massive thing in the Fin Review feature story today on the front page about how major business leaders in Australia are absolutely whining like stuck pigs about the cost of how expensive AI is. And yeah, so I don't know, sentiment's starting to turn just a little bit overall. And it'll be interesting to see how this next quarter plays out. But if the last quarter's taught us anything, you want to make sure you're on. You want to make sure you pick your sector and go with your high conviction, and probably just leave most things alone. So we'll start to get a little tiny drip feed of some early earnings from some of the ASX stocks as well. And I believe we've got the likes of Goldman Sachs and Citi. We'll start earnings season off in the US, not next week, but the week after, because obviously it's the 4th of July. And this chart I'm talking about, S&P 500 quarterly returns since 2011. So yeah, this quarter is the best quarter without a prior 10% plus drawdown. So I mean that possibly that 2012 back-to-back quarters is probably net around one of the better performing sector double quarters. But obviously you can see the best one here up 20 was obviously it was flat. It was essentially flat for 2 quarters for the first half. So that's just impressive, and super impressive. And then and chips, the SOX was up an obscene amount over the course of that just one quarter. That really has taken where a lot of the hot money was in gold and silver and things like that. That hot money's been sucked up. Fairly neutral to mildly positive with gold and silver. I mean, they've pulled back quite enough now, and in the scheme of things, we're just seeing the US dollar continue to head higher, because we had things like JOLTS job openings went to their highest point since 2024. We're looking at hikes, etc. So while that sort of sentiment's around, you're not really going to see you're not going to see an underlying bid tone in gold and in the precious metals. we've still got central banks buying globally. There was actually China bought record numbers in the last month or so in gold and silver. But that's very much a long-term play. It's probably decent buying down here, but look, until they work out what's going on with rates, and we get another couple of inflation numbers, I can't really see there to be any rush buying back into the precious metals. And realistically, you've probably got to, maybe around about a quarter, I think, until anything sort of starts to materialize there with a positive catalyst overall. We could see, if we get any form of scale back in the hyperscalers AI spending, it could be a bit of a rug pull. The Bank of International Settlements, which is the banker to the central banks, flashed a massive warning around AI monetization as well, but no one listens to them generally. They listen to their broker who tells them it's going to go up. And lithium had a bounce back last night after there's been a lot of news around these sodium solid state batteries and things. So they're going to make them obsolete and yada yada. There was an individual story on 3 separate platforms: Reuters, Bloomberg, AFR, overnight on that in particular, which has kind of been in the market for a week or so, but I don't know why it got triggered necessarily last night. What do we got? Nike had earnings as well. They beat on both top and bottom line. Outlook was disappointing, so they sold off. In terms of Wednesday, we've got some manufacturing data tonight. And then really we're just waiting on payrolls Thursday night, and which will make Friday pretty interesting in thin trade. Look, if it ends up being a bearish number, the Asian session being able to react immediately to that payrolls number is probably not a good thing. So we'll just sort of see how that pans out on Friday, because it's quite rare that we get a Thursday number, and then no US market to lead us along, lead us along for about 3.5 days. So that pretty much wraps it up for the moment. We're going to do this week we're going to go back through and have a look at the financial review. Not the financial review, the financial year in review. Last week we did Chips Ahoy, which is pretty topical considering that stellar result for those chip stocks. And but yeah, we're going to go be a little bit more ASX focused. Probably have a look at some of these rallies and the quarter performances in terms of historical context, etc. And do a bit of a deep dive on what we think is going to how we think things are going to go on the ASX in financial year 2027, which is probably a fool's errand, I've got to say. But anyway, we'll do our best. But just search Bulls versus Bears on your favorite podcast platform and subscribe today. Thanks for listening, guys. The SPY was up around about 8 points. We'll probably have a relatively positive day. We'll speak again tomorrow.